when you're looking for pause days and you're looking for the entry, I'll just zoom it in so it becomes easier to spot. Okay, so this is the entry. So after a huge magnitude, what we're looking for is what we call the pause. So usually the day one is paakyat pa yan eh. Paakyat pa yan eh. Okay? The following 3 days is incredibly critical to us because we're waiting for the ranges to become quieting down. Okay? Remember, if the ranges are big and it's noisy, is it uncertainty? Yes or no? Yes, because the ranges are becoming big and the swings are becoming bigger. That means you're having huge buying and huge selling. Do we know who's winning? No, we don't. Okay? But if the ranges are becoming smaller and smaller, it tells us a lot about the nature of the buyers that are present. Okay? So after this huge surge, we're waiting for the pause days because then it gives us better idea as to what we're going to be doing next. Okay? So on day 5, when we see the pause days, hopefully you guys were able to see the pause days. Okay? The buying is at the break of day 2 to 4. This green line that I showed to you guys after the pause. So the buying is at the break of the high. Is that clear? Okay? It's not anticipating. Huh? We don't anticipate. Okay? Because if you anticipate, pwedeng pababa din yan. Hindi natin alam. The reason why we always react, it's because we're always looking for the confirmation. Okay? When you're momentum trading, it's always best to act pag sure na, pag confirmation na, not before. Which one? This one on the first red day? Could be. But I'm going to share to you, that's the entry. Anyway, where's the exit? I'm going to show you where the exit is on the stop loss. So let's say you bought it even at the second day. So the question is at the second red day, you could have bought it. Okay? What I'm going to show to you guys is where do we put our stop loss following anyway. Okay? Clear? Are we good? Okay. So stop loss. So this is the entry on the entry. The stop loss is on the low of the small range day, which is below this day. Okay. So the question is, so you have the entry, you have the exit. Is this clear? Okay. So the question is, how much do we bet? All in? Okay. So that's the next question. That's the most important question. Now when you're doing your risk and you're understanding how much you're going to be betting, okay, this is the more important part. Okay. Now, for the big clients, this will have a difficulty amount for you. Okay? If you're starting out and building your wealth, this will help you so much. Okay? This will actually, whatever your account is, it will help you in whatever category. Except that when you're a bigger account, it's hard for you to deploy the same amount, especially in a penny stock. Okay? Because obviously you don't want to be gambling here. Okay? So, one of the most important thing when it comes to betting size is what we call VAR, value at risk. Okay? So normally we have a certain percentage when we call about VAR. So example, 1% VAR. A VAR means how much we're willing to lose at any given point in time. If you have 100,000 pesos and you have a VAR of 1%, that means your VAR is 1,000 pesos. Correct? That means you're willing to lose 1,000 pesos in every single trade that you do. Correct? Okay, so if you have a VAR of 1%, how many times do you have to lose to go bankrupt? Patay na. You have to lose 100 times. Does that make sense? Because if you have 100,000 and when you're risking 1% of your portfolio every single time, you have to lose 100 times before your account goes to 0. Does that make sense? Okay? This is very important, ladies and gentlemen. It's because in every single trade that we do, we always know what our VAR is, even when it comes to position trading. Okay? So my point is here, when you're momentum trading and you have to lose 100 times before you go bankrupt, okay? So my point is, for this case, we're only even going to use 0.5%. For most of you, this is the number that we always use in every single trade that we do. Okay? We're always willing to lose 0.5% in every single trade that we do. So what this means is that we have to lose 200 times before we go bankrupt. Does that make sense? Are we good? Okay. Now, for most of you that are starting out, I suggest you cut this down to 0.25. Okay? See how it is, if you're comfortable with it, and then you can find ways to raise your VAR over time. Okay? So some traders want to do 1% or 2%. By all means, it's up to you, as long as you know what your VAR is. Okay? Don't go up to me and tell me, oh, my VAR is 1%. Pag bumababa, hindi, 5% na. May problema na tayo dito. Okay? When you do your VAR and you do it initially, please stick to your VAR. Okay? So in our cases, for this case, we're only going to use 0.5% because that's what we use. Okay? Assume the account size is 10 million pesos. Okay? And your VAR here is 0.5% or 50,000 pesos. Okay? So how do we calculate? It's basically our entry example for this one is at the top of this bar, this green one, which is around 1050. And our stop loss is around at 10 pesos, which is the break of the low of that range. How we calculate this VAR is basically VAR divided by our entry minus our exit. Okay? So we have 50,000 pesos that we're willing to lose in this trade, which is 0.5% in this trade. Divided by your entry minus your exit, 1050 minus 10, which is 50 centavos. Okay? This will equate to around 100,000 shares. Does this make sense? Okay, so we're willing to bet up to 100,000 shares to lose 50,000 pesos in this trade. Clear? Make sense? How do we get the amount? What's the total amount that we just bought? So 100,000 shares times our entry price, which is 1050, which is approximately 1,050,000 pesos for the total amount that we just bought for this company. Clear? Clear? Okay, good. Okay, so for selling point, normally we're selling on surges. Normally after 1 to 2 big days, we're already selling half. Okay? This is the harder part to define because everybody has different strategies when it comes to selling. Okay? For the purpose of this, most cases after 1 to 2 days of surges, we're already selling half. Okay? The balance that we do normally is what we call trail stops. So when lamang ka na, what we do is that we put a trail stop that gets us systematically out. Okay? So for these cases, it's usually at the break of the 5-day EMA. Okay? Worst case is please don't wait for the 10-day EMA to get broken. That's the worst case scenario already. Okay? For us, when you sell half, the balance, you try to trail stop it at the 5-day EMA. And the purpose of the trail stop is simple. Let me move first. Okay? The purpose of the trail stop is simple. If you don't sell half, okay, if you don't sell half, pag umakyat pa, jackpot. Gets nyo ba? Let's say umakyat, hindi nyo binenta. Ayoko eh. Greedy pa ako eh. Umakyat pa, jackpot. Pag bumaba, sayang, sana binenta ko. Okay? Everything's hindsight anyway. Okay? Reverse. Umakyat, binenta mo. The next day, bumaba. Swear, galing ko talaga. Okay? The worst is, umakyat, binenta mo, umakyat pa ng 30%. Maski na kumita ka, bad trip ka pa rin. Bakit? Sayang eh, nakita mo na kung ano nangyari. Okay? So to resolve that problem, we have to get out something systematically. Okay? So that's why we sell half, because if you sell half at the first to the half surge, you got the money off the table. At least you can tell yourself, okay, at least kumita na ako. And then the balance is that we try to ride it systematically until something gets out. And normally that's the 5-day EMA, in this case, for the slingshot. Okay? Clear? Later. I'll get to all your questions, no worries. Because if I allow you a question, we're not going to end. Clear so far? Clear?